Well, hello to you today. I just am coming to you today because we've been having more market volatility, and this whole tariff thing is scaring a few people, and the media is not helping there. They're, of course, hyping it up like it's the worst thing ever. But my keyword for today, perspective. Have some perspective, and that'll help you get through this. And for instance, I think way worse than what we're going through right now was the 2020 pandemic scare when the market dropped. Oh my gosh, nobody knew what was going to happen. Was the whole economy going to be closed for a year? But we did work through that. That was quite scary. This one, not so much, and really overhyped, and probably midterm to long term, what's going on will be better for our country and our workers. So that was a little bit about perspective there. And then another level of perspective that I want to give you is, remember, when you're looking at your Fidelity accounts, you're not seeing your safe money there. A lot of your safe money is in annuities, and you're not seeing your annuities when you're looking at Fidelity. We have a certain percentage of your money in annuities. For a lot of you, some of you don't need those, but and they're not the best fit. But for most of you, they are, to give you that safety. And that is there to blend with the volatility of the stock market. So when we have nice safe things, we can deal with more volatility. We're not talking about extreme riskiness, just volatility up and down, because we own mega cap, big companies that are not anywhere near likely to go broke or have huge struggles for long term. So there's some perspective on that. And then also the ups and downs of the market. At the end of 2021, the market, I'm talking about the Magnificent Seven. So that's like Apple, Microsoft, Nvidia, Amazon. Those seven fell by 42%. Right now, from their previous high in February, they've fallen by 25%. So 25% versus 47% just not that long ago. Once they kind of hit their bottom, it took about 6 months for them to get back up. So right now we're 25% down. So a little perspective, it was just recently 42% down with those Magnificent Seven stocks. Of course, you own a few more stocks than that in our portfolios, and you're not going to be down, and you weren't down anywhere near the 47%. So also, over 5 years, those Magnificent Seven stocks are up 308%, even after the 25% fall recently. And we're looking out 3, 5, 7, 10, 15, 20 years with your stock portfolios. This is so far a 2-month thing that's happening here. But over the last 5 years, they've gone up 308%, which is 4 times your money. So 5 years ago, if you had $500,000 in that, right now that's worth $2 million, even after the drop. S&P 500 is up, even after the drop, about 100%. So double your money, even after the drop. So don't be worried. This is normal volatility that happens throughout the years. Different things are happening, and we're seeing drops in the market. But you'll also see good things happen, and the market will come back up, and your stocks will rise likely faster than the S&P 500 because we're a little more in tech. Whew! So I just wanted to get that message out to you today. And keyword perspective, and let me show you. This is the graph of the Magnificent Seven over the last 5 years. The black one on top there, 308%. The blue one, S&P 500, up 100%. We're looking for the long-term average. And that is it for me today. Thank you.